What is a full-time trader, guys? Doesn't have to work outside of that. It's also using trading as a full-time income and doesn't have to work outside of trading to derive that income. That's a perfect example, isn't it? Often people say to me, I go, what's a full-time trader? And they go, somebody trading full-time. But the time bit is the bit in that question, isn't it? What is a full-time trader? But really a full-time trader is just somebody who derives their income from the market.
Positive, especially this weekend of the Art of Trading. Really concreted and solidly made me feel like I have made the right decision, and has made me very excited about the future. Because I had no experience in the trade market, I still didn't know whether they were just another black suit trying to take my money, until this weekend concretely confirmed everything. And it was so amazing to see that they really are a family and they really are a tight-knit community.
My experience was very rewarding. The staff, I think, are so dedicated that it's a great atmosphere that you want to be around.
And we were talking about that risk and reward and how important that is. And what's my whole strategy for risk management? And if I'm having different portfolios, is my risk management strategy going to be different?
John Gow was unemployed when he started investing in shares through Wealth Within, a guide to help do-it-yourself investors make some smart decisions.
With trading, it's not about being in the market all the time. It's about just being in the market when it's the right time, because the share market, you can just trade with your laptop. I'm not being told what I can and can't do by a boss.
What your goal is what you can see in the future, isn't it? Yeah? Right now you don't know what you don't know, do you? And it's like sailing a boat. If you go out sailing the boat, you can see the horizon, but then when you get there, you see another horizon. So as you're walking the journey from where you are to where you want to be, the more you can see and the more you can perceive that you can do and the more you can perceive that you can achieve, yeah?
Well, joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale. Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show. Good evening and welcome to Wealth Within Live, the Australian stock market show where you get to ask the questions and we give you the answers about all things investing and trading. Now, tonight we're going to share with you our thoughts about that age-old debate that rages between the merits of active versus passive investment. As always, we'll look at what's happening on the stock market, give you our thoughts, answer your most burning questions, look at the stocks you're interested in, give you our expert opinion, and a whole lot more. Hello, I'm Dale Gillham, Chief Analyst here at Wealth Within, and joining me tonight will be Janine Cox when she gets into the studio. She's got a few little issues at the moment, but we should see her shortly, so I'll move over to your left, I suppose, from your position, and then we'll get stuck into tonight. But we are together Australia's most trusted stock market educators. So as I said, Janine will be on tonight. She is here. She's just got a few little issues she's sorting out at the moment, so hopefully she should be walking into the studio any minute. We have talked about the show anyway, but if you do have a burning question for us on the right of the screen is a chat box, so put your questions there. Also, a big hi to anyone new to the show. It's really good to have you on. I know there's a few people just on their first couple of shows. But moving on, while Janine's going to get her, hopefully she'll get in here in a second anyway, but we're going to get into the charts. It's the third Tuesday of the month, It's the third Tuesday of the month, and that means we're going to take a look at world market. So let's get into having a look at the charts on the world market. Now on your screen, we've got, I've got the, basically a watch list that I talk about on the market. And as you can see, there's a lot of different indices here. Now this is 1 month, so this is the month to date. And in a minute, I'm just going to look at the year to date just to show you a little bit about that. Now there's a whole lot of different exchanges here, and you can see there's a fairly long list. I'm slowly just taking some of them out here, but you can see at the moment, this month, the Irish Stock Exchange is up 5.32%. sold, but the Dow Jones has done really, really well, and this is the one that it really is leading the world at the moment. Whilst not necessarily in terms of results this month, is actually doing a little bit better. It's up 3.66%, and it has taken that direction, which I thought or had hoped it would do. Now, the CAC is up 3.4 and the NASDAQ 3.11, and the NASDAQ has been the best performing index in the US, the NASDAQ, then the S&P, then the Dow were the areas, or the indexes in terms of return so far. So the NASDAQ has done well, but S&P down at 2.78, and if we keep looking down, the Australian All Ordinaries Index 1.46%. But let's go to the year to date, and then we're going to go and have a look at some of the charts. So you can see on the screen here again, here's that NASDAQ 31.57%. So anybody index investing in the NASDAQ or buying some of those stocks in there would have done reasonably well. The Irish Stock Exchange still there, 25%, followed by the CAC and the DAX, and here's your S&P 24. The New Zealand's done really well, 23.4. So for our New Zealand viewers, and I know we do have a few New Zealand viewers, hey guys, your exchange is doing quite well. So well done for that. The All Ords 20.36 for this calendar year. So that's from 1 January. The XJO is the S&P ASX 200, a little bit lower at 19.84 with the Nikkei down there at 17, Shanghai at 16.5, Tokyo down there at 12.86, and Footsie doing really poorly at 8.61. So let's go and have a look at the chart. And the first one I'm going to bring up is the Dow. So what you're seeing, this is the chart I use every Tuesday for my interviews with Jim Beach that I do, and obviously when I'm talking about the Dow, I'm looking at this chart. Now I do use the Dow as the chart of my choice because it really is that one that's been around for such a long time. As you probably would have heard me say on today's report, if I go right back, and I'll hit my little escape button, if I go right back and zoom it back, you can see I've got data back to 1900 on here. So it does look a bit strange through here and massive moves through here. But this is where, when I'm talking about the Dow and I'm looking at it, I'm actually looking at that whole history, because both Janine and I have studied the whole history of the Dow, right back to 1900, all its different cycles, all the booms, the busts, the crashes, the whole range of different things that we've actually done. So the Dow is really that metric. If I'm looking at what the All Ords is doing, what I'm actually looking at is using history of the Dow, because on the All Ordinaries Index, I've really only got data back to about 1980. So studying some of those timing cycles that I talk about, these big sort of moves that the market makes, it's a little bit easier for me to do it on the Dow going back over 100 years, because if I'm looking at a big move, it's say 30 or 50 years long. Well, if we've only got data back to 1980 on the All Ordinaries Index, that's about 40 years, roughly just under 40 years that we have data for. So therefore I use the S&P 500 and the Dow to really go back and look at what I'm actually doing. But right now, the S&P 500 is doing really well, as I said before, but the Dow, this is the interesting thing. Look at that. It's now broken above all of these highs through here. So it's now made a new all-time high. It's sitting there at 28,000 or over 28,000 points, and importantly broken through this. But here's the interesting thing. See this grey line? I drew this from the 87 crash across previous all-time highs right through to here, and you can see now it's actually breaking through here, and so I expect the Dow to keep going up, and I think we're going to get up to around that sort of 30,000 over the next 2, 3, 4 months, and that's my real take on the Dow. Now I'm going to have a quick look at the DAX, and you can see the DAX there is moving up quite nicely there. It's been bullish the past few weeks. This is a monthly chart here, so we've seen the last couple of months being a little bit more bullish, with a couple of months up. There's its previous high there at just over 13,000 points, so it's getting close to that. But again, looking really, really nicely bullish, and I still think it's got a long way to go, so not really sort of giving me any concerns. Here's the one we looked about here, is the Footsie being dragging behind. Now, the Footsie will probably start to play catch-up. Normally when you see a market slower than others, like the Dow, the same what happens with us and the Dow, or the Australian market and the Dow, we get out of sync with each other. The Dow might run away, and then the Dow will pull back, and our market will run away, and they just take turns. But over 100 years, they're pretty even, and we could discuss those one day. I think there's a show in there, I think, for me to talk to you about what the Dow does and what it does in relation to the Australian market. But you can see here how the Footsie's really been going sideways since January 2017. But it's not really falling away, and that's really suggesting to me that it's just a holding pattern until Brexit. And once Brexit happens, I think it'll break north, and it'll go through that all-time high and do really, really well, because the market's not telling us it's really bad, because if the market didn't like Brexit, you'd see this going right down. Looking here at the Hang Seng, it's doing quite nice. It's been a bit more bearish, a little bit more volatile, the Asian markets, but right now you can see the last bars, a lot of indecision, so I suggest we may see the downward move continue over the coming months or so. So it is looking really, really, really good, but that's my take on the world markets at this point in time. And as you can see, we've just snuck Janine in on the set. So how are you?
They beamed me in, Scotty.
We beamed you in, Scotty. I just hit the button and you came in.
Like magic.
I just said you had a few issues. I didn't say that you had issues with
Thanks
your hair
very
or
much.
your makeup or any girly things. So that would have been sexist of me. But
yes, it would have.
But it's nice to have
Good
you
to
back.
see you.
It is. I got to say something without you interrupting.
Oh, really?
Oh, only joking.
Gee, that's a bit cheeky, isn't it?
So that's pretty good.
It's all right, just
do you
kicked him under the table.
No, that's fine. Do you have anything to talk about with the market or anything? Or?
Look, I agree with everything you said.
Oh, thank you.
Yeah, I'm pretty excited about the Dow. It's good, isn't it? To see it.
It is. It really is nice, and I think. But it's interesting. I'm still getting emails from people going, "Oh, I don't like the markets. They're going to crash. I'm going to gold, or I'm getting out of the market. I'm selling all my stocks." I'm thinking, what the?
Yeah.
Like, seriously.
What picture are they looking at?
I don't know, some planet. And then you get people going, I don't like this stock because it's doing this. And I was like, well, what research and analysis are you doing? And I think most people put a blindfold on and throw a dart at a dartboard and go, okay, I'm buying or selling.
Look, I think it's as simple as this, though, because I think that what happens is if you're following someone in the commentary, you start to trust them. And then what happens is, and I see this with, I did it myself when I first started looking at the share market. There were certain columnists that I followed, and what happens then is you end up believing what they're saying and follow the fear.
Yeah, you do, and that's the thing is, and it's really interesting how people's pick up on words that people say. You know, if I say something like, oh, look, I think the market's looking weak, people go, oh my God, it's going to crash. And it's not. I'm just saying it's looking a bit weak. So, and people just tend to
You have to be careful what you say these days, don't you?
Oh, look, I do, not just at home. I didn't say that either. But you always do. It's just one of those things people take us out of context all the time, and so it's very, very hard to be a market commentator, and because people do take you out of context all the time. They go, you said this, and I went, on what planet did I say that? You know, I don't know how many times we've had an email going, hey, Dale said this or Janine said that, and we're going, nope. And we watch the recording and we go, where?
How did they get that out of what we said?
Get that out anyway. But let's go into the emails now. So now you're settled down, so
Awesome.
take a breath from that. But we'll get into looking some of the emails. But I wanted to share with one that I got from one of our students, or one of our current students, Mike, of ours. And I thought all of our viewers would like to see it and what, because many are aspiring to what Mike's actually doing. And just to give you a tiny little bit of background on Mike before we show you his email, Mike was a Queensland policeman. Queensland, he's about 6 foot something. He's about 6 foot mountain size, dwarfs me. Retired I think it was last year he retired from the police force, roughly, I think, from memory. He bought my first book, read that, made money, bought our trading mentor course, made all the money on that one to pay for the course, and then he used that to fund his diploma course. Then he used that to fund the advanced course that he's on now. So that's how his progression is over the past, 4 years-ish?
Yeah.
Roughly.
And just more recently, we get emails from him regularly saying
we always get emails. He's just a lovely bloke.
Cruise.
But right now, there's always one thing. I always ask people what their goals are. And with Mike, he said my goal was to go on a cruise. And that's what he said to me. I want to go on a cruise. And I said, okay, great. I said, when you go on a cruise, I want a photo. Well, anyway, Mike sent this email into me about a week ago because I did ask him to send me some photos. And Mike's email says, hi, Dale, Janine and Emma. Emma is one of his assessors or coaches. He said, my wife and myself are enjoying our New Zealand boat cruise, thanks to Wealth Within. Cruise paid for with part of profits from one trade. Tailored dinner jacket likewise paid for with part of profits from one trade. Tailored bow tie and shirt paid for with part of profits from one trade. Thanking the Wealth Within team for making me profitable. Cheers, Mike and Karen. And then I emailed Mike to congratulate him and said, oh, well done, matey, that was your goal. Like, he wanted to do that, and he did tell me he was getting a tailor-made jacket, and I said send the photo in. So I don't know whether the team's put that up for you, but if they have, you'll see Mike. But he came back to me after I said congratulated him. He said, Dale, thanks for those kind words, but the credit must go to the Wealth Within team for the support given to me both trading and academically for my modest success in trading the market. As you know, I have a long way to go on my share trading journey and a lot of rough edges with my trading and studies to sort out with the help from the Wealth Within team. I've set a goal to get a balcony and then a mini suite cabin for future cruises when my share trading profits reach that level. Thanks go to you and the Wealth Within team. Cheers, Mike. Lovely guy. You can actually get on our website and actually see a little video of Mike having a chat.
I actually said to him that I'm going to get him to recommend what cruises to go on because he's actually been on more than one.
He's now been on more than one. Yes, he has now. This is like his second or third. He's a cruiseaholic now. Something like that.
Now we've got an email from Roberto who asks, hi Dale and Janine, thanks for your great job on the show live every Tuesday. I've just started tuning in a couple of weeks ago and tried to live chat with you. I've started trading without any knowledge, and then I've read your first book, that's Dale's book, watched your DVDs. Now I just ordered your second book, look forward to receiving it. Anyway, I bought SGR, which is the company that I have been working with back in 2017 at 5.23 with the buy and hold strategy, and I know it's not you teach, but I bought it before knowing you and also see directly the inside dire coal goal of the company.
His English is really good, isn't it? So.
An improvement made. He's making a good effort.
He's making good effort.
Made more confident on keeping the stock. Thus, I decided to hold at any cost, even when they were down at 376, 40% from their all-time high. I've actually bought some more shares long the downtrend as well is at the bottom, 376. Now looks like it's on the uptrend again, not sure, please confirm. And I'm looking to sell it when I will gain a good profit, but I would love to hear from you, your thoughts and suggestions on the stock. It would be great to see you looking at this stock on the live show. Oh, there's more.
There's more.
Also, you both often talk about rules to get in and get out of a stock. Will the new book explain these rules? Thanks again for your work. Really appreciated, Roberto.
There you go. That's a long question.
A big one, isn't
it? We're going to bring up his stock, aren't we? So let's go into
that.
I'll bring up his stock while you answer his other questions.
Okay.
Can you remember them now?
Yeah. So he was actually looking at the trends and wanting to know if he bought the stock.
Yep. So SGR.
Should he sell it and what sort of rules? So did we want to show him something on the chart or not?
Yeah, we can show him something on the chart. So we'll bring up the chart on the screen. But there's a couple of
Entertainment, which is an interesting company. It's quite volatile, actually, this particular one. I think it was an offshoot, wasn't it, from Crown? Was it what that was?
Star? I don't think it was. No, I don't think
it floated in 2011. I just remember a whole hoo-ha about it when it floated, and I thought, well, okay, let's see what happens to this share, because Dale and I had been talking about how so many shares would fall significantly after the float, and then we saw this one drop dramatically. And you can see on the left-hand side of the chart how it actually fell pretty swiftly from around $4 mark right down to around $2.20. So, losing around half its value, which is not, that's familiar territory for us. When we look at IPOs, we see that all the time, which is why we don't dabble in that IPO market at all.
Yeah, so that was a $2.20 down in there.
Yeah, that low in February 2014. So it took a few years to get there, but still, I mean, it's all of that lost opportunity in holding on to that stock all that time, even though the share's greater than, the price is greater than what it was when it listed. You can see it's not too much greater. So if I actually go and have a look at where it opened at, which is over here, and then to the right you can see there it's only made, I'll just drag this across. I hate it when this thing does this and it gets stuck there.
We go.
It's about 15% over all of that time, which is just ridiculous, and it's why you just don't hold these sort of shares, particularly getting them off the float. So what often happens on these floats, particularly if there's a lot of marketing hype beforehand, that they actually rise quite strongly. But looking at the stock right now, Roberto, I actually like it. I think it looks really, really nice, and you are right, it's actually moved up. Whether it's in an uptrend or not, our students will be able to tell you that, whether it meets the rules or not. And looking at it quickly, it might fall just short of meeting those rules, but it has crossed over a trend line by the look of it, if we were to draw it. And in Dale's book, he does talk about trend lines. He goes through the rules in the How to Beat the Managed Funds and puts it into a bigger picture perspective too in the new book. And there are a number of different angles that Dale looks at in the new book, not just the trend line rules, but also looking at the macro and how that influences the trading decisions, isn't it?
Yeah, obviously the new book is the next level up from my first book that you've already read. But do I go into a lot of technical analysis? No, there is absolutely shed loads of videos out there and books on technical analysis. And if you saw my market report yesterday, you'll know that I answered this question on that market report. But basically every day, every week, we get dozens of traders ringing us up, emailing us, who have been studying technical analysis for 1 to 15 years or more and still don't get it right because they've been reading books and watching YouTube videos. So I'm never going to write a full book all on technical analysis, because it just would not work for you. Because just understanding what a technique is, like a trend line is, you can intellectually understand that, but can you draw them? No, because I know most people that are watching tonight would have heard of the term trend lines. Most of you would maybe even experience, or a lot of you may have even experienced what you think a trend line is, but I can guarantee, unless you're one of our students, there's a 99.9% probability that you can't draw them properly.
Even when the students have the rules there and they're learning them, they make mistakes, they miss things. That's why it's important to have the support and the mentoring along the way. Yeah,
it's not about just finding out what something is, and a book is, like I was saying to a gentleman yesterday who I was chatting with, and I can't remember exactly what his role was, but he had degrees and everything else, and I said, mate, could I follow you around for a weekend or even a week and then do your job properly? And he went, not a hope in hell. So I said, well, how do you think you can do mine? By reading a book or just following me around for a few days? It's not possible. So that's really what it's about, isn't it? Yeah. From there. But let's go on to the next question. I'll just pick it all up.
Let's get into the chat and see what other questions there are.
But first, before we do, just remember, sorry.
We're getting into the chat?
Hey, we will
get into the stocks.
We will get into the stocks in a second. So let me go in there. There's some stocks on here now. I've found there's New Farm is the first one. So if we go to the charts, you can run the mouse and I'll go and look on the chat. So New Farm, and I forget who it was, and I'll go to the top.
While you're doing that, New Farm looks a lot better than it has in a long time. However, we can see this big gap here on the right-hand side on the weekly chart. And for any of you who have been following the program, you know that more than often than not, a stock will come back to fill big gaps on the chart. Now, I think this was part of a corporate action. Wasn't there a takeover, or was there some sort of announcement that drove the price up originally?
There was something a little while ago, and
it's not one that I'm following specifically.
A lot of people got interested in it because of all of it.
Yeah. Often when those sort of corporate actions happen, or there's a takeover, or there's been a buyout or something, that the share price will stick up around that price where the announcement was made and just hover around there. If there's doubt about whether it will proceed, then often the stock will fall away a little bit before it then comes back up.
So this was, to give you the question, it was from Chris G, who says, hi Dale and Janine, I purchased New Farm on the 9th of September.
Yeah,
so he purchased on the 9th of September.
So it's here, yes.
And whilst it's in profit, I'm wondering what your thoughts and how long do you let a stock that you can't get a trend line on drop before you exit. Then he goes on to say, I know you recommend 15% typically, but this would erode nearly all profit. Do I just stick with it and let profits run? Also, would love your thoughts on EC Export at $1.65. But just on this, if you've got good stocks, and I think this is the really thing, you'll always see stocks that will run away from your trend line, or you may not be able to get a trend line on. But if you're buying good stocks and they run on trends, then the chances of you getting a trend line on it are very, very high. The reason why people second guess things is because they don't trust their rules, and they then make emotional decisions. So if I was looking at this stock right now, I'd have a couple of different rules on it for my exit strategy, because obviously you're in profit at the moment. There's that huge big gap that Janine talked about that's right through here. So right now it's got a bearish bar here. It's not pushing through. So will it fall away? Possibly. But what are your other rules? And that's the thing is, and a lot of traders will just sell out and miss out on the next run because they're afraid of losing some of their profits. So it's just about having better rules.
That's why we teach more than one rule. Because you can't just have one rule for all stocks. One size does not fit all.
Yeah, so it's pretty good. So let's move on. So the next stock we've got there is, I can't remember.
It is ECX.
ECX, and I'll find out who that is.
Well, this has come off a bottom now. So
it's the same guy. This is Chris, sorry.
Okay, so this is the sort of volatility you can expect to see on a stock like this. Just have a look at how far it fell. Almost 100% of its value, and then it has recovered somewhat. But imagine the people who purchased up here. Did he have a specific question about, or tell us when he purchased it?
I just said I had a look at it.
Okay, so looking at it, if you purchased it up here somewhere in 2017, then you would have almost done your dough, and it may not recover back up to those levels for a long time. At the moment, it's starting to show some support for prices around $1.60, $1.70, but it could just as easily slip below this low here in November 2019, which would mean that it's more likely to come back to sort of $1.40, $1.30 levels. If it actually goes through this high up here, then I'd be expecting it to continue to trade higher and could head to somewhere around the 230, 250 mark as part of that move. But right now, it's a bit dubious really as to which way it's going to go. It's just sideways, really, and hence you see all of the opens and closes at the same price. Monthly charts indicating that it's more likely to come back as well, just looking at that. So I would say that, if you were looking to purchase, I'd say if you haven't already bought it, there's some rules here, even in the Trading Mentor course, that could have allowed you to purchase this stock and you'd have a really nice profit sitting there on it. But if you haven't got it at the moment, I wouldn't be suggesting now is a good time to purchase it. I wouldn't be looking at this stock myself, so that's just something, but that's me, but I'm a bit more conservative. I'm not necessarily into stocks like this particular one.
Okay, so that's let's ECX. Move on. So we'll go to Francois, who says, I own Lendlease, so that's the next one.
Okay, Lendlease is actually looking really fantastic at the moment. It's actually proven itself. It's moved on. For a while there, I actually thought it was going to fall away. You'll note that there's a close here in August 2019. The following week, it actually pushed up really strongly and has continued to trend higher. So looking at that, it's really unusual to see that trough lower than this one here, and then for the stock just to go straight up without any completely unabated. So, I reckon it's in no man's land at the moment because that's just really unusual.
Well, let me read
for a
the
share
question.
To do that.
So, because you just jump into the chart straight away.
Okay.
He's saying, I own Lendlease and bought in at 1509. So he's bought in not
so
too
down
far
here,
away.
so that's okay.
So about 1509. Dale, you mentioned yesterday that it looks like it could fall over. What does that mean? Thanks for your time. Now, again, this is like...
What does that mean, putting it in context?
Yeah, what does it mean in context, like we were talking about before, where people take things out of context? Because you're looking at the stock. If we have a look at this stock...
When did you mention that anyway?
Yesterday on my report. Okay. I actually looked at the stock.
Right.
So if we're looking at this, we've got how many months up? 1, 2, 3, 4, 5, 6, 7, 8, 9 months up. We've had one pull back here. We've got 1, 2, 3, 4, 5, 6, 6.5 months straight up. And have a look at this. How many months does it do 6.5 months without coming down at least once?
Yeah.
It just doesn't, it's rare. Like here, that's about it. But we're talking now, we're back at the 2000. So all I was saying is it's just going to come back a little bit. So it's nothing to be worried about. Zero.
So what you're saying is history is telling you that it's unusual for this stock to rise that long, and therefore it needs to take a breather.
Yeah.
And I think what it's looking like it's actually going on a slow train now. See, the opens and closes are getting closer together.
Yeah, and that was the other thing I said. It was just slowing down a little bit. So so nothing major. So let's look at, I've got another stock, so we'll do one more stock before we get into our main topic for tonight. So we're going to have another look at another stock, but we've got one from, where is it? A2 Milk from RB.
Okay.
So we haven't had one from RB for a while. He's saying, what's your opinion about it? So hope you guys are doing well. I'm looking at buying A2 Milk, so thanks RB. We are well. Janine's now caught her breath and she's settling into it nicely tonight.
Thank you. Looking at this stock, despite the strong rise, there's no reason on this chart right now to be purchasing the share. Looking at it, there's a really steep trend down there. Maybe you could get a trend line in there. If we did, then maybe that would change my mind. Let's just have a look. I'm a fair way from the screen here. So look, there is actually a line in there, and Dale might disqualify it. You tell me whether you're happy with that line. So it looks like we might be able to get one in there, but the students can tell me whether that's valid or not. But over the last couple of weeks, it's actually moved in the right direction. But just look at the monthly chart. See how you've got this outside bar. Now look, let's go back some time. I'll just open this chart up. See how it did the same sort of thing here? In August 2018, there was this really strong rise, and then it went sideways for a bit and down. Stocks often repeat patterns. So I'm not saying that this is actually going to fall away right now. That's not the point. It's a question of, is it going to continue to rise strongly from this point on? Well, I'd say that it's more likely to have a little bit of a slowdown and just take its breath. Now, it's gapped up, so there might have been some news with the stock. Has anyone got any feedback on A2 milk? This was actually the day's move, so I actually haven't picked this up on the feed today. Has anyone picked that up as to what's happening with A2 milk?
We'll have a look. Nobody's written anything yet.
So it's actually gapped up by, let's have a look here, about 17.5%, which is nice if you actually were in the stock already. However, it would have been pretty, dubious trying to pick it at these lows, because there was no real indication of being able to get into it. So more fluke than a fancy guess, or a fancy guess, I would say. But looking at that, you've got resistance all the way across here at around the $14 mark. So look, at the moment, I'm just saying, look at the news and see what's going on. If you're holding the stock, obviously if it was me and I was holding the stock, I would continue to hold. If I was looking to purchase, I wouldn't be doing that now, not without fully understanding the reason for that gap up. And knowing if it's some sort of takeover, you're unlikely to get much more in it unless there's some sort of competition out there for the share price.
Yeah, it's not doing enough for me at the moment. I think that's what you're saying, isn't it?
Yeah,
It's not quite doing enough. Yeah, it's gone up. But
well, not only that, I'd want to know why it's done that first.
Yeah, you got to remember, this is a stock that everybody wanted to get in for the past 18 months to 2 years. So you're getting those people that missed out on the last run.
Oh, that's a good point.
All going, oh, geez, it's going up. Let's jump in now.
It's gone up a lot. Let's get it now.
But there might only be a small amount of those people, and if they run out of steam, then the stock's going to fall back. If the overall market and the big end of town think this stock shouldn't be at the prices it's at. And I'm not saying they are saying that, but right now it's not telling us enough that it's
that's
correct.
A good point.
But now, while we're doing, I've got a couple of questions from people. But before I ask the question, remember, hit that subscribe button, guys. So that big red button that says subscribe on it. So hit that. You're helping us out at the show. And remember to hit the like button too, because that really does help us as well. But I got a couple of questions. Another one from Francois, but it's not on a stock.
Right.
And I've got another one. So the question is, and I'll read it. He said, P.S. Dale, did you say no one took up the offer you had 2 weeks ago signing up for the diploma course? Is the offer still open? The offer was basically I wanted one person to mentor in my 10 traders, because I had an opening for that. What actually happened is I had 4 or 5 people just send their application straight in, and so I had to mentor all 5, because how do you pick between 5 people which one it is?
You'd be unpopular.
And it's like, otherwise I'd have to sit there and interview them and then pick them out, and then somebody would be upset. So the answer is absolutely, definitely not. It's not open again, but you can enrol in the diploma course and you'll still get mentored by the team and everything else. This is just a separate thing that I'm doing on the sideline, but I'd love to have you as a student anyway. But that's the answer to your question. But next question I had was from somebody who says S.A. Wilson. I'm not sure what your first name is, but evening, do you have a favourite stock of all time? A stock you may have fallen in love with over the years and traded many, many times. And the only thing I've fallen in love with is my wife, and stocks generally.
And that's not me. Can we please clarify that?
And that is I had.
You know how many people have said that?
Yeah, I had a phone call, and I just took a phone call on yesterday with a guy, and he goes, "Oh, your wife and you and your wife, I watch you on the TV all the time." And it's like, no, this is not my wife. We're very close, but it's not my wife from that point of view. But
they're very close, and they do work together.
Yeah, and yes. My wife works with us all the time, and Janine's just as close to my wife as I am as well. Or actually, not quite as close from that point of view. But it is. Janine and I, if you get to know us, you'll really understand there is zero chance of Janine and I ever falling in love with the stock. We just do not do it. They're stocks to us, and we're the same with property. Like, we both own investment properties, but we couldn't care less shares, whether we own it or sell it. It's not making money, we get rid of it. If it's making money, we're keeping it. It's pretty much as
Actually,
simple
one
as
thing I
that.
said to one of my students that I'm mentoring through because we have a support program. When you get to Module 4 in the diploma, I answer a lot of your emails. So I work with you, and it's like a one-on-one almost. You email in questions, talk to me about the stocks that you're looking at. We go through your analysis. Now, this particular person told me that that they were really struggling with the concept of being able to identify a stock and for picking a stock. So they were really struggling with it. And when we actually sat down and looked at all the issues to do with why they were struggling with it, it came out that I think that they knew that their stuff, but they just had the fear of not being able to move forward. Like, that was a big thing. And so that's why, whether you're on Dale's mentoring program or whether you come and do the diploma and you get to Module 4, we get rid of a lot of those fears along the way and allow you to be able to move forward and to be able to trade really, really well.
Yeah, you still get mentoring on the diploma course by my team. So there's lots of people on my team that are traders.
Look, it's the assessors as well, isn't it?
Well, that's the
doing
assessment
that
team,
part.
plus then, as you said, a Module 4 and 5, you and me. But these other traders, it's a little bit different. They've got to be videoed and by me and ask questions and things like that, and etc. So there's a bit of a take.
I just wanted to make that clear, because I thought that it's not like if someone missed out on the mentoring with Dale that they don't get that, which is what you said before.
Yes.
But I just thought you didn't
people take
expand
it out
on
of
it
context.
quite that well. Yeah, because you are getting a lot when you come through, especially with the trading essentials though. I mean, with the mentoring, you actually call them, don't you?
Yes.
So that's the difference, because with the mentoring on Module 4, that it's really up to you to email in to start working on what you need to work on, and then.
Well, it's reactive.
Well, it is, but to a degree, some of the guys that email me, they actually say, "I'm sorry that I haven't emailed you for a while."
They do, don't they?
Yeah, because, and I think Barry, who's on the chat, often, they actually joke about the fact that I'm going to give them a hard time if they haven't done them.
Well, yeah, that's where tough
done
love
what
is.
they're supposed
that,
to do.
Good mentors will actually help you get to where you want to go, and that's really what it's about. And this gentleman I was talking to yesterday who rang up about our course, who's going to do our course, he said he's been, watching videos and reading books for the last sort of over 12 months, and I said, "So where are you today?" And he goes, "I haven't placed a trade yet." And I went, "Why not?" And he goes, "Because I just haven't felt that I could do that." And I said, "Oh, okay. So how much time?" And he asked me how much time the course was, and he goes, "Oh, okay, that's a reasonable time." I said, "How much time are you spending doing what you're doing now?"
Yeah, that's
and
a good question.
He goes, "At least what that is." And I went,
Sure.
"And where are you now?" And he went, "Nowhere." And I said, "If you'd done the course 12 months ago, you'd be trading. So you tell me what it's costing you." And he went, "That makes sense, doesn't it?"
Yeah, I know. There's been quite a few people that have said to me, "I don't have the time to do it." And I said, "Well, what time are you spending watching television? How much time are you spending on your phone, on chat forums or on Facebook and different things?" Everybody's got the time.
They have, and that's the thing is, it's just making it. Oh, I just skipped through our thing. Sorry, I better go back because it's. I've just skipped through my whole thing. So let's go into. Where are we now? I've just lost my place on our script. So let's go and have a look at a stock.
Yes,
so let's
I think
go and
that's
have a look
idea.
at it.
You were
So
actually going to bring up another one.
I was going to bring up another one.
STO, was it?
So no, Mikhail, ANZ, because I've had a lot of
ANZ?
people asking me about ANZ at this point in time. So
All right.
quite a few people
Interesting.
asking me about if it's going to get over $28, and I think I've had about 3 or 4.
Yeah, but the question is when.
Yeah, when.
And looking at ANZ, you can see on the monthly chart serious resistance across here. You can see a number of peaks here in October 2015. Again, a short-term one in October 16. Funny about that it's happening each year.
It is.
And October 2017. You want to guess where the next one is? It wasn't October 2018.
It wasn't.
It was August. And then again here we've got May 2019. So a lot of resistance across here. And notice how it's fallen away and left a gap on the monthly chart. Very rare does a stock leave a gap on a monthly chart and not fill it. The question is, when will it fill it? Now, we may see the bank move sideways for a little bit before it tries to push back up. But right now, because it's actually pushed down the way it has, there is a risk that it could continue to fall and take out this low here. Now, it's not about being reactive and saying, "Oh, well, look, if I'm holding the stock, should I get out of it?" Now, I mean, if I wouldn't be holding the stock right now. That's just because I just don't like ANZ. I haven't liked it for a long time. And same with NAB. But looking at the gap that's there, it could move up and fill it. If it moves up and fills it in the short term, then that's not necessarily a good thing either, because it could just continue to drop away. But looking at ANZ, I'll just quickly switch to the weekly chart because it looks worse, doesn't it?
Yeah, well, you can see where it paid a dividend. It paid a 3% dividend yield last week.
Yeah, and that's actually not a bad move. Like looking at the degree that it fell as when it paid the dividend, I'd be reasonably happy with that move down, but it just looks awful the way that it's unfolded. It's not a bullish move. Like notice how it unfolded back here in 2016, and you'll see that it was more of a consolidation and then a push up. This is a consolidation and a push down.
Yeah, it's not looking good anyway.
Yep.
So I think we better move on now.
The money's not behind it.
We're running a little bit behind tonight. We've got the topic tonight.
Yes.
So, but it is time for our tonight's topic, which is passive versus active investing, and we can subtitle it after my first book, Learn How to Beat the Managed Funds by 20%. So, but now, Janine, much has been written about the benefits of active versus passive investing. In fact, I think it's an argument that happens all the time, doesn't it?
It
I think
is.
you and me have it
Constant.
so many times with so many people, that argument between passive versus active investing and whether it's more beneficial, and what one approach is inevitably more popular than the other. But before we get into that, why don't we explain the differences?
Broadly speaking, active investing is defined as the process of researching and picking the best stocks to buy or hiring a professional fund manager who takes an active approach to do it for you. This is what we do for clients all the time, as we are considered active fund managers. Now, we're quite conservative as well. The underlying assumption in this process is that it is better to hold certain stocks over others in an attempt to outperform the market as measured by a benchmark or index. Now, in contrast, the passive investor aims to replicate the returns of an index at the lowest possible cost with the least amount of effort. Why would you want to do that? While some investors relish the challenge of trying to pick their own stocks, others are happy to let someone else like us do the work for them. But let me say that the active versus passive decision doesn't have to be one or the other choice. Investors can combine the two.
Now, generally speaking, a passive investor is someone who has little or no time in which to select and manage their stock. That's why they're passive, or in their portfolio, yet they still want to achieve good returns over the medium to long term. Now, if this is you, then as we've talked about in the past, we recommend you stick to the top 20 stocks in the share market and really look to hold between 8 to 12 stocks at any one time so as you don't over diversify your portfolio. Now, whilst it's not advisable to embrace a set and forget or buy and hold mentality, these stocks are the top stocks of the market for a really good reason. Therefore, they're more forgiving if you make mistakes. That said, if you do decide to buy and hold, you must accept the potential risk that you're taking is higher, meaning the rewards will be lower than if you actively manage your portfolio on a regular basis.
Now, what we often see with investors as their capital grows is that they decide to take a more active approach. From experience, I've found that once the passive investor begins to make money, they miraculously find more time to devote to managing their investments.
Happens all
Funny
the
about
time.
that. An active investor, as the name suggests, is someone who is more active in selecting stocks and managing their portfolio, dedicating a few hours a month. Again, due to time constraints, the active investor's knowledge of the stock market is generally limited, although they do recognise that taking an active approach to managing their portfolio has the potential to optimise their returns. Sound familiar to anyone?
It does sound trivial, doesn't it? Now, typically an active investor turns over, on average, 20 to 30% of their stocks in their portfolio in a year. Now, this can
That's
be...
an individual, is it?
That's an
Typical?
individual
Okay.
can do that. And it can be more depending on the individual, but we're talking about generalising here, and people do turn over their stocks, although this really will depend on market conditions. If in a more volatile market, the more turnover occurs. Now, given that the active investor is often constrained by time, again, we recommend developing a portfolio between 8 and 12 stocks from the top 20 on the market. Although, depending on your level of knowledge, you may also want to consider stocks out to the top 50. Now, as your circumstances change and you have more time, you may want to widen your horizons to include a few more stocks from the top 50 to 150. The more you go out, the more time you're going to need to manage your portfolio. Although this will depend on the portfolio style you actually select.
If you are new to the stock market and you may want to manage part of your portfolio actively, up until the point you build your knowledge and confidence level. For example, if you've got $50,000 to invest and someone may be sitting out there saying, I don't have anywhere near close to that, But if you do, or you have more, you may want to place 70% in a passive investment strategy and actively manage the other 30%. So it's not having all of your, your ideas or everything in one basket. And as your confidence and knowledge increases, then you increase the amount that's being actively managed over time, while still maintaining a maximum of 12 stocks. For those of you watching this channel regularly, you'll know that we are not big advocates of over diversification. Why? Because it exposes you to almost exclusively to market risk, which cannot be eliminated by diversification. In fact, research has proven you only require between 15 and 12 stocks in a portfolio.
Five.
15
and 12.
Oh, goodness me. It was a bit of a spit it out. Now, I would actually go so far as to say 8 and 12 stocks, because people take us out of context on that 5. So I often find the inexperienced look at that and then they think, okay, I'm only going to buy 5 stocks, therefore I'll have 20% in each of my money. When that means, when you look at it, the amount of risk you're taking in every individual position is much higher than if you've got, say, 8 to 12. So when we're running the fund, we start with 10, but we can go out to 12 in investors or clients. Traders. We have traders who invest with us as well and just don't want to be managing all of the money themselves. So that 5 is more, historically, it's more about traders who are just trading shorter term typically. Even in like if they're trading leveraged markets, they'll be focusing on fewer stocks, won't they?
Yeah. The more you don't have the knowledge, or the least amount of knowledge and the least amount of experience you have, the more you should be at 12 end. At 12 end. And if you're quite experienced and you're quite knowledgeable, then you can be at the 5 end, which is really what we're saying here.
I'd also go so far as to say that even if you do have the experience, that you can be at the high end and be at closer to 12 if you've got a medium to longer term strategy where you're just wanting to just, over time, not put so much time and effort into your portfolio each week, and over time bring the bulk of the reward from that bigger picture portfolio. Because generally, even some of the traders that we've had that worked with us, and they want to trade higher risk or higher moving markets, they don't put a lot of money into that side of it. They put the bulk of it. And for some of them, I remember them telling us that it took a long time for them to work that out.
Yeah, it did. And we get emails like that all the time from people who, the people with the least amount of knowledge want to take on the highest amount of risk, which is really silly. And they're buying the most volatile, illiquid stocks, thinking they're going to make more money, and they're trading more, thinking they're going to make more money, and yet when they actually learn how to trade, they actually flip. And that's where the challenge we have. We have to deprogram these people when they start doing our courses to tell them a better way, because they keep thinking the opposite of what's actually true. Trading more doesn't make more money.
Yeah, exactly.
It's just more trading, and you're making more money for the brokers. Good trading makes you more money, and you trade buy low, sell high, however long that takes. And we see questions even tonight, where do I get out? Well, you get out when the stock tells you to get out, not just because you're guessing at it.
Yeah, but when people are panicking or they're nervous about their share, it's just the same old thing. That means that you don't have exit rules, or you're not confident about those rules yet. But just one more thing on that 5, the 5 to 12, is that if you're actually new to the market and you're wanting to start building your portfolio up, Dale's talked before about, try to start off with 5 if you can, and then by the 6th position and then the 7th position and so on until you build up to a good number of shares in your portfolio.
Yeah. Now, many of you watching tonight would be aware that I proved how you can achieve very profitable returns by investing directly. And I do that in my best-selling first book, How to Beat the Managed Funds by 20%. And more recently in my newer book, Accelerate Your Wealth, It's Your Money, Your Choice. Now, my intention when I wrote these books was to show how, by implementing some really simple yet effective investment strategies, you could earn much more than the average return you would receive when investing in a managed fund or when trading the stock market for most people. Now, effectively, I wanted to demonstrate how, if the managed funds were returning 10%, you could just make 12%, because that just makes sense, doesn't it? That's 20% more than a managed fund. 2% of 10% is 20%. And it would appear from the ton of feedback that I've gotten over the years that the simplicity of these strategies that I did outline in my books not only amazed many readers, but inspired a lot to take control and invest directly themselves. And in doing so, they achieved very rewarding returns. In fact, my first book, so many people emailed saying they completely missed the GFC. So if you got slammed in the GFC, go and get the book. It'll never happen again. people also ask me also how rewarding was the results from my book, and they do that all the time. Now, would it surprise you to know the average annual return I achieved trading the top 20 stocks on the Australian market from the 31st of January 1997 to the 30th of January 2007, as outlined in my first book, How to Beat the Managed Funds by 20%, was 52.09%, which equates to an annual compounded return of 20.03%, an annual compounded return of 20.03%. But in comparison, the managed funds averaged an annual return of around 8.4% over the same period. Now, between the 31st of January 1997 and the 30th of January 2007, the compounded return, if you invest directly, it says there 20.03% versus the managed funds 8.4%. So you can see how it did much, much better.
Now, in your most recent book, Accelerate Your Wealth, we continued with that process to invest from the 2nd of January 2007 to 31 December 2016, taking into account the GFC. And we did this so that we could demonstrate why the strategies outlined in the books are so powerful, even in the worst market conditions imaginable. The gain achieved from capital growth and dividends during this period, taking into account all corporate actions, equates to 225.82%, or an average annual return of 22.58. This equates to a compound rate of about 12.5%. Pretty good. In comparison, over the same 10-year period, the managed funds returned 4.6% as published by CanStar. Now, it really gets, actually, before I go through that last little bit, it really gets my goat how, at the moment, because the managed funds are actually measuring from the lows, post the GFC, investors go and they look at the returns that they're offering, and the first thing I say to them is go and ask them for their returns during the GFC, or to take into account the fall in the GFC. Where were their portfolios sitting as at March 2009? Get a
20-year return and see what it is.
Yeah, and see what, 20-year, but even just to go back and look at what their returns were back then and ask for that and see what they were doing, because chances are for a lot of those funds, they lost between 30 and 50%. Some of them, the highly leveraged, there were some that were actually leveraged portfolios, not in super funds obviously, but outside of that actually really got into some strife during that period.
Yeah, how many people came to us who had lost 50 to 90% on their portfolio over between that sort of 2007 high and about 2010?
Yeah, there were so many.
Truckloads of people coming to us who were in the managed funds that just lost lots of money. And so, but people that bought my book just blew through the GFC, didn't even know it was there, because all they had to do was follow a couple of basic rules.
Yeah, it's really good for an individual to empower them to be able to do something, isn't it?
Yeah. So as you can see, by simply concentrating a portfolio in the top performing stocks on the market, you can not only achieve very profitable returns, but outperform the managed funds by a significant margin.
Now let's get into the chat and see what other questions there are.
No, you're excited about getting in. You always love the charts, aren't you? So we've done RB, so we've done Mikhail. How about Evan? CKF, Evan asked a question. I'll find the question while you bring that up.
Okay, CKF, Collins Food Limited, really interesting one actually. I really like this share, how it's actually consolidated on a number of occasions. Look on the monthly chart how it moves sideways over a decent period of time and then has moved up. It did it again here in 2000, and I'm just waiting for that to come up, 16.
Evan says he holds Collins Foods right now, and he said it's, I would like your thoughts on these. Have they been trending down recently?
It's been up. Like on the monthly, if you're looking at this as a medium to long-term proposition, okay, 1 month is down, but overall, most of you are going to look at this chart and say that overall it's still up, right? And looking at the weekly chart, it's not trending down either. There's no downtrend on the stock. It's just that there's a 4 weeks down on the stock. So it's a counter move to the actual uptrend. That's all it is at the moment. See, it's done it before. Here we've had a number of bars down and then it's risen. Now that's not to say that it's not the end of the uptrend. We don't know that for sure whether this is the end of the uptrend or not, but you'd be able to get a nice little trend line up that rise to see whether it's actually trying to find support on that trend line or whether it's actually gone through the trend line. So this is the interesting part of the study. And look, I've back tested lots of stocks in the past before, and I can tell you that the interesting thing about this stock is that there's no major decline on the share. that you would be able to properly road test the rules on it anyway, because looking at it, it's just largely gone up except for a few declines here within these sideways moves. So looking at the stock, I would say the trend's still up, and until it proves otherwise, you'd be running with it. Or if you had different rules for the stock, then perhaps you may decide to be looking to exit on different rules, because it's not just trend lines. As we said before, there's a whole lot of other rules as well that you can use, and looking at that, it's holding it around, what is it, $9.39 at the moment.
Okay, let's get on to Nick. It's a good question a comment I want to make from you. Bring up SDF for Nick, and I want to go back to Ben. Ben Youngman says, I'll put my glasses on, in the world of stocks, the rearview mirror always looks clearer than the windshield. I think it's a great quote. And
that is cute.
I often say that to people, you can't live your life looking through the rearview mirror, and the reason why it's so small on the windscreen and the windscreen's so big, because you want to see where you're going, not where you've been. And in the market, you need to know where you're going, and that's what most people don't understand, is they look at what happened on stocks and then make their decisions. Like, a stock's gone up 100%, so I'll get into it now, thinking it's going to do that in the next 12 months. But you need to be good at determining where it's going to go, not only just in price, but in time and how it's going to unfold. And Janine and I always talk about price, pattern, time, not just price alone.
Well, that's one of the reasons why Mike decided to go onto the advanced course, so that he's got the price, pattern and time, because the advanced course has a lot of the time aspects
in it. It's a lot more of it in it, yeah. There is
more
time
of the
in
pattern.
the diploma course, but we don't tell anybody that is in there. We sneak it in there.
Oh.
But anyway, so let's get on to the stock for, who was it, Nick?
Okay. Steadfast Group, okay, so the SDF. Now looking at this one, another example of a nice one where it consolidates sideways. Notice the sideways consolidation here up until about February 2016. A nice trend moving up, and then another sideways move and a nice trend. So this is a good trending stock, but yes, like the other one, it has not had a period of decline so far yet. So Nick, at the moment I think it's just steady as she goes. It's holding there quite nicely. A nice rise above this point here at, I think it's 367, means that it's more likely to continue to rise. But there is a little bit of resistance around this level here, and if it does fall away and keep moving back, and we see it moving strongly back below this level with a weekly close, or even a decline down to below that 350 level, we could see the stock end up back around here. So that's the risk with it at the moment. While it's trading sideways and while it's moving up, it's fine. If it starts to pull back strongly, then there's a risk that it takes out that low.
It is. It is. All right, so let's go to the next one. We've got one from Michael who wants Santos.
Okay. Michael,
so
Santos is a great stock.
And so he says, hey guys, I bought Santos at $7.78 and was wondering, should it be performing better?
Okay, look, $7.78 is just around this level here. Now, whether a stock should be performing better or not, it's not really the question you want to be asking, because a stock can do anything at any particular time. It's the market and the major players are controlling the direction of the share. So looking at it now, it's broken out, and yes, I would have expected to see it move on a little bit further. However, there is a gap on the weekly chart here which could be holding it back temporarily. Even if it did come back to fill that gap, I wouldn't be too concerned about it, because long term the trend's still up. It depends on how you're wanting to trade it, and that's the thing. But I'd be expecting it to head towards the $10, between $9 and $10 over time. So I like Santos at the moment. It's holding steady.
Okay, so I got another question. This one's from Vishwan Nath. I hope I said that one correctly.
Is this a stock we're going to be looking at?
Well, it will be. I'll give you this NEARMAP. NEA is NEARMAP. He goes, I'm wondering if you can please shed some light on NEARMAP. Just want to know your thoughts on how this stock will trend in the next year or so. He goes, I have some shares in it, which I bought last week. Is it a hold, buy or sell? Thanks.
Okay. Dale, do you want to answer that one?
I don't know why you bought it last week. It's not exciting to me at this point in time. It's probably not proving at this point in time. We've seen this huge move down right through to here, and I think you're really, really early in getting into this stock. Now, you're asking me how long's a piece of string, and I was chatting with this guy yesterday on the phone. He was saying about different things, and he actually rang up because he wanted to inquire about our FX course.
Right.
Our FX and CFD course, and he goes, I'm looking at FX CFD course. I said, why do you want to do that? And he goes, I want to make money. I went, yeah, but how much is money you want to make? And he goes, I don't really know. And I said, well,
Right.
what do you want to trade FX for?
Because he thinks that you have to.
And he thought he had to. Now, a lot of people make decisions based on emotion or what they think. And right at the moment, this stock really hasn't proven it's going up at all. It really has had a huge, big move right down here. It's come up.
So what you're saying is it's not a decision made on any technical rule. It's more a decision. There is a short-term technical rule that could have been taken there to get into it, but it's a higher risk,
it's a real high risk
entry rule that could have been used there.
And until I got through this sort of level here, I wouldn't have been touching it. I really wouldn't have been touching it, because a lot of people think just because it did that, that
it's going to do it again.
And it's not necessarily going to do that again. So
it needs to get above this level here at about
Yeah.
$3. What's that? $3.06 to start moving on. And if it goes below the low here, then it's more likely to keep falling.
Yeah, so we're not going to tell you whether it's a buy, hold or sell. I think you need to understand that yourself. So looking at this, we've got another one. We've got Mike Balin, who's won Coca-Cola. So bring up CCL. Says,
Coca-Cola.
hi, Janine and Dale, love the show. Thank you, matey Mike. Great to see you on the show. Thanks. Hope you've subscribed. Hit that button there. He's looking to enter Coca-Cola after a trendline and strong resistance break. Is this enough confirmation of a possible new uptrend? Thanks.
Look, there is no trend. There is no downtrend trend line on the stock at the moment, but it has actually broken some pretty strong resistance and is moving up. So while I do think it looks nice, there is a gap on the weekly chart, which means it's more likely to go up for a couple of weeks and then eventually come back and fill it. Now this stock has got huge resistance around 12.50, so it may peak out around those levels. It may go to even 13 before it does peak out. But what you have to look at is when you're looking to get into the market with a stock, you've got to understand how far a stock is likely to rise with technical analysis. You know, what's the probability of it getting to that level, and also if it does get to that level, is there enough upside in the trade to justify taking it?
Well,
That's
it
the
is.
thing.
I mean, you look at some of the other moves it's had over this period here.
Yep.
Bang, 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 bang.
It's not reliable, is it?
It's not reliable. So what rules are you using around this stock to make sure that you're not just buying it in here and then seeing it go the other way?
Yeah.
And that's really where a lot of people do get caught. They see something take off. And I get people, they go, oh, volume's increased, price has gone up this many percent, it's done this, I'll get into it. And they get in just before it falls away, and they do that. So, but
volume's
just be
actually
careful.
Dropping. It's not rising there either.
Yeah, so just be careful. Just making sure you got the right rules on it. Next one we've got is from Majid. Hi Majid, how you doing, buddy? Good to see you back again. We've got a couple of Majids that are students actually as well, but I don't think this one
Let me know if you are.
This one's not, I'm pretty sure.
Okay.
Any thoughts on IPD? They invented, that gives you a signal, doesn't it? They're not a student. They invented a cancer post-treatment device cleared by the FDA, approved in trials, still awaiting private payers. I purchased stock at 15 cents, but the price has gone up since.
Look, I actually don't mind this at the moment, given where it's traded. It's done this really. One of the things we teach in our course is helps you understand where a stock is in its overall pattern. So looking at this, just because it's made a low doesn't mean that is the low. So you get to learn, is a stock more likely to continue lower, or is this likely to be the bottom? And looking at this here, it's a nice little sideways move that it's had, and it's pushed out above this high here. I'm actually...
What's the volume?
It's not
on it?
liquid. See, that's the thing. It's not really liquid. So it's a high risk proposition.
If it's got FDA approval, why hasn't it taken off? Why isn't it up on $2?
Yeah, why isn't it even more? But look, put it in context
I would
with
ask.
context with where it was just before that move. It went up 40%. Yeah. So those little moves, you know, they look big. They look small relative to where it's been. But look, you know, if any time you were going to like it, you would start liking it now more than where it was, say, back here, because it wasn't certain. There wasn't
how much volume
strong
going
enough
through it
support.
at the moment?
If we have a look at the volume, I guess that's what you're wanting to see. A lot more volume over the last year, which is good for the stock.
But it's not high. You're talking about 2 million shares.
No, that's why you could do your dough in it pretty quickly, couldn't you?
Oh, absolutely, absolutely. So let's look at, we've got my producer yelling in my ear, said 2 more stocks, Dale. So who's got 2 stocks? Let's go to the bottom. And look, nobody. Cherie Gilroy saying info on APX. Any info on technical analysis? So
APX,
Cherie, this one's for you.
is that the right one? APX?
APX, Appen.
Appen Limited? Okay, that's similar to the other one that we looked at before, isn't it? Where it's come off that bottom, it's pushed up, but there's no actual entry rule for it. It's actually worse than the other one because at least there was a short-term entry rule. There is no, unless you could get a trend line down there. Some of the students will let us know if you can.
This is a much nicer stock.
In terms of the company itself, you mean?
Yeah.
More liquidity.
Yeah.
So it's a better stock, but the outside bar is just showing you that there is no confirmation that it's going to move up yet. And there's a big gap on the weekly chart. There's a bit of resistance across here, hence why it may slow down temporarily. So I'd like to actually see it pull back before, I would consider looking at it and then a move on. It's filled this gap here, which is nice to see. So, it could just trade up a bit more and then go sideways for a little while. But it looks better than what it did obviously a few weeks ago.
Paul Wilkinson also asked, he said he got into it at 23.50 and it's jumped nicely, a bit concerned on the gap.
Yeah. Same thing that I mentioned before, that it could come back and fill it. So next one?
Yeah, I'll give you another one. I'll give you another one in a second. Adrian Frizzo said he's been in Thailand, so there you go. So
I'm still waiting.
He's still waiting for what? Oh, for the stock code, okay. Was it PNV for Evan?
PNV. Okay, looking at that, it's actually pushed down. Now, this is the first sign that it could continue to fall. I'd like to see it close up this week. If it doesn't, then we could see the stock head back down towards $1.80, $1.75 in the short term.
I don't think Evan says he owns it or not. And he's not. So he does own that. He does own it. This is Polynovo, is it?
Yeah. So looking at that, that's toppy, isn't it?
It is
now.
very toppy.
But it could pull back for a couple of months and then move up again. However, you'd be sort of saying to yourself, what's my strategy to manage my risk right now, given where it's come from? Yeah, and to lock in some profits.
Well, I'd be having a stop loss on this,
that's what I'd be doing.
I'd seriously...
But we can't give you personal financial advice. Obviously, you've got to make your own decisions. However, from our point of view, if we were holding the stock, we'd be looking at taking some money off the table.
Oh yeah. It's especially if it keeps going bearish this week and into next week. I think it is a bit risky at this point, and hopefully it turns around and goes up this week. But you really do need some rules around stocks like this, matey, and that's what we suggest, very, very strongly suggest. And right now, let's. I think that brings us to the end of the show now.
That's sad.
It went so quick because you only done half the show anyway.
You're just going to rub it into me
by the time you got here. But hope you've enjoyed tonight's show. Really, thank you very much for participating. Sorry it was a tiny little bit disjointed, so we settled down in the end anyway. But if you would like to see the show grow, remember to share it on your social media with your friends and colleagues.
Also, make sure you put this show into your calendar so that you're back online next Tuesday at 7 p.m. If you cannot be with us live next week, we're always happy to receive your questions, so send them to info@wealthwithin.com.au and just type Wealth Within Live in the subject line. And just remember to say to Dale that you still enjoyed the show even if I came in late.
Well, that really does bring us to the end of the show. As I mentioned, I hope you enjoyed it as much as we have, and thanks for taking part. And we'll see you again next Tuesday at 7 p.m. But before you go, hit the subscribe button, hit the like button.
Everybody.
Everybody's got to do their bit. But for now, goodbye, good luck, and good trading.
Good night, everyone.